What's going on, you guys? So in this video, I'm going to be giving an update on Micron technology. Now, Micron is definitely the most popular company that I cover here on the channel. And I know a lot of you, you're either heavily invested in Micron or you've really been thinking about investing in Micron due, to the value growth play that it is. And I just kind of want to give my, opinion on what's going on with the markets, how has it been trading the past couple of weeks, and whether, I think that the continued sell-off is either justified or, it's just noise as, the rest of the market continues to sell off. Obviously, Micron will sell off in that. So I'm just going to be going through, what has, been fundamental, what's been noise, and kind of my opinions on it. If you guys are new to my channel, make sure to stick around. I cover tech stocks, I cover financial topics, and I cover, just overall my investment strategy going into the next couple of years. And so if you guys are interested in any of that, make sure to stick around. So Micron stock is definitely one of the most interesting plays, in the stock market currently. It is a company that is trading at extremely low valuations. It is experiencing massive growth, and it's in an industry that is expected to grow at, one of the fastest clips compared to any other industry in the market for years to come, and it is trading at such a, fundamental bargain. And now, while I do personally think that Micron is trading at a very cheap level right now, I do not think it is exactly as cheap as everybody, just looking at the quick, like the PE ratio and the, the PEG ratio. I don't think it's trading at that exact, discount, and I'm going to kind of explain why. But to catch up with what's going on with Micron, fundamentally, not much has been going on the past couple of weeks. They had their 10K was released a few weeks ago, and now the stock, is just kind of trading sideways. They did announce that they plan on buying out for $1.5 billion. They plan on buying out Intel's portion of their joint venture in JV. Now, JV was a joint venture that Intel Micron did back in 2015, I believe, and that was the company that they decided to develop the 3D point flash memory through. Now, this, you can kind of think about this product is the middle ground between saying have an average solid state and, DRAM. So DRAM, is extremely fast, volatile memory, but you can't, say, hold an application on it. It's mainly just for, the ins and outs of, crunching down videos and, doing all your processing, and then your SSD is going to be what you're going to store your, programs on and things like that. And the 3D point is going to be a 10+ fold increase in speed to the standard solid state drive that you see right now. So ideally, what solid state drives kind of represent in the computer world right now is going to be replaced eventually by 3D point, assuming, it really takes off when it hits market. And so Micron sees this as a golden opportunity. They're trying to continue to diversify their revenue streams. Over the past year, they went from having about a 70-30% breakdown between DRAM and NAND, and now, by the end of last year, they had about a 90-10% breakdown of where their revenues were coming from. So the fact that they plan on dumping their money into, solidifying that this is going to be our new, storage center and where they plan to be selling, all their products in the future, I think that's a very smart decision for Micron to do, going into the future, because it allows them to not be solely dependent on exactly what's going on with DRAM. As we know, DRAM is an extremely profitable industry, and, Micron is one of the best players in the space. But, it's really good to see a company not, kind of trying to be a one-trick pony and really trying to spread its wealth out. So I definitely think that's a smart idea. A lot of people are freaking out. They're like, well, if the company's, going down, they're already doing a share buyback, why are they buying, this entire partnership away from Intel? And you have to realize that they are paying, the same price point that they paid 3 years ago for the rest of the company. It's not like they're paying an extremely, grotesque amount for this company. They're paying in line with what they already had paid, and it was producing enough, capital to make them, justify the investment. So I see no reason why, when they already cleared $10 billion of, CapEx for this year, I see no reason why they can't expand that by about $1 billion to, solidify this and, make sure that they have a future growth driver in the future. So all in all, with the issues with them buying out JV, I definitely think it was a smart idea. Now, going into, people continue to think that, Micron is either overvalued, undervalued, what's going on. Now, it's difficult to value semiconductors like you do the majority of, the stock market. It's one way to, you can look at a brick and mortar store and you know exactly with what's going on. This is how it's producing, the amount of revenue it's producing, this is the earnings, and then this is what they actually have on, physical assets. Tech stocks and semiconductors and things like that, a lot of what they have in their balance sheet doesn't necessarily represent all of what the company's worth. and that's generally due to things like patents and intellectual property that you can't directly put a dollar amount towards. So the book value for tech companies seems to normally be the price to book value seems to be relatively inflated. Because of this discrepancy, it also causes their price to earnings ratio due to the research and development to be a bit inflated to the overall stock market. But when you're looking at, say, the book value, that I think isn't the best metric to look at tech companies in. The company is currently trading at only 27% above what their book value is. Now you get the book value when you take their total assets and you take out their total liabilities. And so when you take out their total assets of about 43 billion and their net liabilities of about 10 billion, you still end with about $33 billion of hard assets for the company, and the company is currently trading around $40 to $45 billion. So, as far as a book value premium, Micron isn't really trading at an astronomical number. If you look at a company like Facebook and Google, you're looking at 5 to 6 times what their physical assets are, because all of it's being produced by their intellectual property. But Micron, it has fabs. It's opening up a new fab in Virginia this next year. So it's something that has a much better margin of safety when you look at the entire tech industry. So it's an interesting play from that perspective. And a lot of people like to use the book value as kind of the margin of safety that worst comes to worst, the company should trade for what its assets are worth. And so that represents only about a 27% decline from its current stock price, assuming it maintains those assets. Now, when we come over here, we kind of see the two biggest companies that are, being a hindrance to Micron currently are definitely Intel and Nvidia. Now, that is because with Intel has made a plethora of mess ups over the past year, and I've made multiple videos about it between the whole Intel and AMD issue. But what was said in Micron's last earnings call is that because of the server CPU shortage, mainly due because of Intel holding 90% of the space, they are not able to sell as many microchips for DRAM that they were anticipating, because a lot of that gets shuffled around. Because if you can't make a new server, if you can't buy the CPU for your server, then you're not going to upgrade. You're not going to switch from, say, whatever their previous server platform was, probably running DDR3. You're not going to need to switch to a platform that runs DDR4, aka buy a brand new bulk set from Micron, until that gets straightened out. So that's not anticipated to get fixed for about 2 quarters. So that's why when I talk about Micron being extremely slow and probably just bleeding out for the next couple of quarters, that's where I'm coming from. Regardless of what happens in the market, I'm not expecting a major, surplus surprise from Micron over the next 2 quarters, because they are reliant so heavily on Intel getting their, act together and really allowing them to pump out, DRAM modules. That's why I do think that right now Micron is trading at a fair value, but I do think that a lot of investors, especially growth investors, are going to kind of lose, their, affinity with Micron over the next couple of quarters when they see nothing going on. And I think that after a couple of quarters, excluding a recession, Micron will continue to, pick up and revamp its revenue growth, and will reach, more all-time highs as far as revenue and earnings per share goes. Nvidia is a different play. So Nvidia, all of it's in AI, it's in autonomous vehicles, it's in gaming, it's in everything. But the graphics cards that Nvidia creates use a form of GDDR6, which is a form of DRAM. And that is made by Micron as well. Now, with their newest graphics cards, Nvidia has opened up a whole new area as far as special effects due to their turning architecture and their ray tracing technology. And it's great for Nvidia. However, for the end consumer, it wasn't a huge performance boost because they spent so much time introducing this new technology. If you look at, say, the new 2080 Ti and you compare that to the 1080 Ti last generations, you're only getting ballpark about 30% of a power a performance increase when you're looking at a close to a 50 to a 60 price increase. So to a lot of the end consumers, myself included, that isn't enough of a premium, as far as performance to justify upgrading, or to not justify, buying. If you needed to upgrade no matter what, you could just buy the 1080 Ti at a considerable discount and get roughly the same performance. So for the end consumer, it's going to be interesting to see, how many of the new graphics cards from Nvidia are going to sell, and especially on the server space, are a lot of people going to be going for that? Or are they just going to be going for the products that Nvidia's already had out? And that could lead to some cannibalization in their product sales, because it's what happens every time a company like Nvidia, goes for the new tech. The actual product is relatively lackluster. and on the next cycle, they generally have the massive performance boost that everybody's waiting for. So I do think Nvidia is going to have a relatively slow year because of that. And if Nvidia has a slow year and Intel has a slow year, Micron will inherently have a slow year because Micron is going to be dependent on these two big players selling a lot of products in order for Micron to maintain a lot of revenue. I hope you guys understand where that's going. That makes a lot of sense to me, just because that's my space and I love, learning about tech and, I build computers for fun. So this makes a lot more sense in my head than I might be saying it out here. So, make sure to let me know in the comment section down below if I really need to explain, what all these different processors are used for in a computer and, how they all kind of relate with one another. That's just kind of the way I'm looking at the space altogether is as if you're going to buy a new computer, you need all of these, semiconductors to be in line before you make that purchase. Another big thing to think about with Micron's current valuation is the market cycle. Now, with all semiconductors, all tech, anything that is not a consumer staple, you are heavily dependent on the market cycle going in your favor to, continue to have earnings growth and things like that. Now, so when you look at these companies, they might be trading at a pretty cheap valuation, looking at, say, their current earnings to the current, price. You have to realize that when a recession happens and the whole market goes down by 50%, these companies' earnings are going to get hit magnified in comparison. So you can look at a company like Nvidia, Micron, AMD, Intel. All these companies can experience earnings drawdowns of, if the market went down 70%, they can experience drawdowns of 70 to 80%. And then their cheap valuations and their cheap financial ratios become actually relatively expensive. And that's just to be expected because their earnings are going to magnify whatever's going on in the stock market. And that's something to keep in mind. If you look at any time that the market dipped, for an extended period of time, odds are the semiconductor space took a much deeper dive. And on the opposite spectrum, if, the market's doing well, semiconductors do, on average, much better than the overall market because they are the things that they're the backbone that drives the majority of advancement. So you really have to keep in mind where we are in the market cycle and what you think is going to be happening. I've been saying this for a long time. If you are bearish on the stock market over the next couple of years, semiconductors are going to be a much more volatile and much higher risk, reward perspective, assuming you're doing a lump sum investment. If you're going to be slowly buying into it and you plan on buying into it more aggressively when we hit a recession, you'll do really high returns. But going full in on your investment now, near the peak of our economic cycle, probably isn't the best, if you're expecting, to get your returns out in a couple of years or so. Because who knows how long the recession is going to be, and who knows how long it's going to be until we, make all-time highs again in the market. So please keep that in mind. Now, the question that everybody seems to be asking for is, where's the bottom for Micron? Now, as I said earlier, to book value, Micron should only trail down, about 27% or so. With that in mind, and with the amount of fluctuation that's been going on in the memory market, for the past couple of cycles, I do think Micron's bottom, quote unquote, should be feasibly between $35 and $30 a share. And that comes out of their physical assets, the way that the actual industry that all these memory chips are going into, has been expanding, and that is kind of the biggest growth driver for the overall economy. I do think it would be kind of unreasonable for Micron to trade below $30 a share, given all of that going on and given how they're not loaded up with debt. They have a lot of cash. They're executing properly. I do think that anything below 30 would be kind of irrational. I do personally think that. So I believe, my floor price target, which could be completely wrong, mind you, would be about $35 to $30 a share. Now, something to keep in mind is that if we hit a recession, the book value and what should be traded for Micron means nothing. This stock could go all the way down to 10 again because of pessimism that hits the semiconductor space, and they think that every company in here is grotesquely overvalued and that we're not going to need tech like we did 10 years ago and things like that. So always keep that in mind, and it's a very, risk-reward type frame when you look at, say, a company possibly going through a recession. But something that's interesting that I don't think the majority of Wall Street is really focused on right now is that eventually, and what's been anticipated that will be introduced in a year or so, is GDDR5. So GDDR5, every few years, all the memory markets and all the CPUs and the graphics cards, they all switch what platform of RAM they use. And now we're currently on GDDR4. GDDR4 came out, I believe, in 2014, and that replaced DDR, not GDDR. We had DDR4, and that replaced DDR3. And DDR3 was around for about 7 years, which is a pretty, extreme amount of time. And then it went 11 years before, mainstream products stopped producing DDR3 in their, mainstream laptops and things like that. We've only recently been on DDR4. But if we look at what is expected for the actual life cycle of DDR4, we should only have another year or two before DDR5 comes out and starts to replace it. That is when you have companies like Micron, SK Hynix, and Samsung make massive amounts of money, because now they dump money into CapEx, like Micron is currently aggressively doing, and you start to create a new line of RAM processors and semiconductors. Now, when you do that, you pretty much have all of those customers that just bought everything from Micron in this past cycle. Now, when they want to upgrade their tech, they now need to buy this whole new set of DDR5 in order to, fit in with whatever, CPU that they're getting. And that creates, kind of a self-fulfilling market cycle that will continuously put money back into Micron, assuming it can take more market share. Thankfully, Micron has been really aggressive with taking market share. So what that means is that by the time that, servers are finally on the DDR5 level, which is a complete speculation because no company has made a definitive claim that this is when they're switching to it, should happen, say within 2 years here, unless some erratic and something erratic happens in the market. They actually have, prototypes of DDR5 currently in the works. So it's only inevitable before that starts to get rolled out. And when that happens, you kind of rejuvenate this entire sector. So that is a major catalyst, but that major catalyst isn't, that's a few years out. So a company like Micron in the current state that we're in right now is definitely a company that you have to be watching and you have to be strategically buying shares into over the long term. This isn't a company that is going to be like it was a couple years ago and it was easy money. If you got in, like when I first started buying it and you were at $20 a share, I'm very comfortable that the shares that I bought in Micron are not going to go back down to that level. The ones that I bought and slowly when it's been hitting around the $40 range, definitely I think that those ones can go down further, but I'm still waiting to, aggressively add to my position until we hit to the $35, $30 range, which I don't think it should trade at that level, but I definitely think it can. So that's just stuff to keep in mind. That's my pretty long update with Micron. I know a lot of you are freaking out, and I wanted to make this video pretty in-depth and just kind of get everything I had going on in my brain out here on camera. So I hope you guys liked it, and if you guys have any other questions about Micron or any of the other companies I follow, make sure to ask me in the comment section down below. I love talking about investments and I love talking about tech, so I try to answer just about everybody. So if you guys have any questions, feel free to throw them down in the comment section below, and if you guys want me to make any particular videos, please just let me know. And I hope you guys had a great time watching the video, and thank you for watching, and I'll catch you guys in the next one. Peace.